Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at S&P 500 and Nasdaq. We'll then take a look at tech stocks, that is Microsoft, Apple, Meta, Netflix, Google, and Amazon. So let's see what's going on in the market. Well, we do have Fed effect, and what is that Fed effect? And that is, well, they cut the rate by 50 basis points, but uh, it's mostly just the volatility that comes during that time. I can show you that really quick, and then we'll jump into the technicals overall. Well, this is also technically related, but you can see we got a really good volatility, and then eventually it just pretty much sold off. Right in the post market, it's getting a little bit bought back up, but that's fine. I mean, this volatility could be traded using my tool as well. You can see we had a really good run up. Multiple times we got the plays as well to the upside, and then this is where the structure changed again, and then you can see where it fell. Structure became a little bit bullish again, then fell again. So you get my point, right? Like with the structure, these signals can still be traded, right? Regardless of if it's an upside day or not, right? So, but overall, it was again a bit of a choppy day, right? However, we on the daily interval are still technically bullish and on S&P 500, and right now there is less weakness, and also the overall structure on S&P 500, in my opinion, can still remain. Even if the cool off continues, guys, the structure in my opinion will still remain bullish until this level. That will just constitute a pullback. Yes, near-term weakness can come, but which looks like it wants to. We'll take a look at hourly interval in just a second, but until this 20 days moving average and 554.75 cents, that will just be a pullback, right? So accordingly, things can be looked at or traded, but yeah. So just keep that in mind. It's a sell-off. A cool-off can continue as well, the way the candle is looking like, because you can see it again. It tested all-time highs again, did go up, but didn't close the day at all-time highs. So it just sets the precedence for tomorrow as well, that we might remain in the weakness, but we'll have to work with the levels. What are those levels? So in the morning when I did NVIDIA video, I provided you this trend line as well. This can still be used for tomorrow. If we stay below it, it's a problem, or you can use just this level. The level to watch tomorrow is 563 and 21 cents. If we can get above it, it's all great and good again. Otherwise, if we stay below it, things can continue weaker and to the downside. All right. So let's take a look at QQQ now. QQQ, very similar. You will see the same price action of volatility throughout all the stocks, because when Fed meetings happens, this volatility comes in and it disappears or afterwards. It's just that there's just a lot of movement happens during that for the price action. That's what it's all about. Now QQQ, yes, cool off is coming. Structure, what is the structure telling us on the daily? It's still technically in the bullish structure, but that cool off can continue. But as long as we're above 20 and 50 days moving average, it's still a bullish structure. This is the level you are watching the price action, right? But let's take a look at hourly interval. That are we in the danger? So looks like post market is looking really good, and things will just get clear when I get to Apple stock actually, because that's the one really going nicely. Now QQQ, this is the level 473 and 82 cents. If we can get above it and above the trend line, this thing can continue higher. Otherwise, no, this becomes a level of resistance right now. It's a significant level. If we stay below it, we stay below it, right? So that's that. Post market action is looking good. Let's see tomorrow what it brings us, right? Microsoft. So Microsoft, it did go up as per our structure. You can see we got a really good buy here. It's still just in the pullback technically though. All right. But yes, this cool off has been coming. That's fine. Structure is not bearish though. As long as this cool off doesn't break below 426 and 65 cents with 20 and 50 days moving average, as long as we stay above it, technically structure is still bullish on this thing. Let's take a look at hourly interval to identify levels for tomorrow. Tomorrow, if we can get above 432 and 95 cents, it will be fine. If we stay below it, that's a problem. All right. Yeah, the level to watch for that, yeah, 432 and 90 cents. You can also follow this trend line for tomorrow. If we can get above it, it's all good. Otherwise, no, this trend line can, keep it lower as well on Microsoft. All right. Apple. So Apple is the one that's been going up today, and it shouldn't be a surprise. I talked to you guys about this level 217 and 50 cents. If we can get above it, we can continue higher, and we are getting that play. Going to the hourly interval, yep, this was the level I told you, right? 217 and 2 cents, and we got above it today. It was a bullish play. In the post market, it's going up. Apple is looking good again, actually, guys. As long as we don't lose the levels like 220 again, we will be fine on Apple to the upside. Meta is also the one still positive, all-time highs, right? And structure on this is still bullish. You can see even after yesterday's cool off. Yeah, this is still bullish. Let's see if it crosses the next all-time highs, or will it slow down? What are the levels to watch? So it's, yeah, with this one though, guys, with the Meta, I would say as long as we're above 20 and 50, we are just fine on Meta. It follows these moving averages really well. If we lose it, weakness is there. Otherwise, no, pullbacks are just a buy on Meta as well. Netflix. So let's go to the daily interval. Netflix showed some sign of a little bit of a cool off today. We are above 20 days moving average though still. Let's see the structure on the active mode. We are technically just in a pullback. We haven't really changed the structure yet though. But yeah, this is where 20 days moving average you are watching. If we lose that tomorrow, there's a possibility of weakness, but looks like in the post market this thing is also going up. Yeah, it's right at that level though, 689, and I'll also want to give it below 200 hours moving average for this thing to fully break to the downside. Otherwise, no, right now it looks fine. But yeah, since it has broken these intraday lower highs, lower lows, right, you are watching this level. There's still high level though, 697 and 48 cents. Above this only, I would say it's fine to trade intraday upside actually. Otherwise, it's just going to be a rebound at these levels like 20 days moving average, or where the significant level is right now. Google. So Google is looking still fine even on the daily interval. This thing also changed the structure bullish. And if you have been following my dividend investing channel, you know that I bought Google right over here on my Google covered call ETF, right? And this thing is still technically in the bullish structure going up. And over here, yeah, right now it's finding a good support at 20 days moving average as well. And even on the hourly interval in the post market, I'm seeing it really going good, nicely up, still above 20 and 50 hours moving average, found support at the significant level of 159. Yeah, as long as we are above this level, it's fine, no problem. Amazon, daily interval first, and still in the bullish structure. All right, 183 and 36 cents. Above this, we are still fine, still in the bullish structure. We are a little bit selling off at the next significant level, which is fine. That's why these levels are there. Accordingly, you have to take profits and all of that. And on the hourly interval, we are still fine. This is the level today. And tomorrow, if we continue to hold above this 186 and 20 cents, we should be fine. Yeah, if we don't lose this level. Yeah, we should be fine. All right, well, that's pretty much it for this video, guys. And if you found it helpful, please hit the like, subscribe. If you need access to my tools that you see in the videos, links to my tools are in the description of this video as well. All right, I'll see you in my next videos. Take care, bye.